Good morning, Chris. How are you doing?
Yo, I'm good. What's up, man?
I'm doing excellent. This is Brian Jones. I'm here with Chris Hood, professional options trader and world's most interesting man.
Grayest beard in Oakville today. That's for
Yeah.
sure.
Is it
Getting
still
there.
snowing in Canada, or you have some sunshine up there now?
Oh no, dude. We had a heat warning yesterday. I think the weather here is schizophrenic. Can't work itself out, man. It's one day cold, one day hot. It was nearly 40 degrees Celsius. So I don't know what that is in your measurement. Yesterday it was horrible.
Yeah,
Even the skunks are outside complaining.
it's been pretty hot and humid here. So I
To think, like, 6 weeks ago, I had snow on my driveway. That's
I finally got my motorcycle fixed, and I've been riding around a lot. And I only have a sort of a fall jacket, so that leather. I mean, I'm like just
nice.
sweating through everything.
But nice. I mean, nice weather to ride.
Yeah. It actually feels really, really good.
That sounds pretty doable.
So
Yeah, it's a clear day. It's going to be another scorcher. It's bizarre.
yeah,
Like when people told me to come to Canada, I never expected the weather to. I didn't expect spring to be 3 days. I expected a little bit longer.
you guys went straight from snow to heat waves, huh?
Oh man, it's crazy. You can never work it out. Mother Nature definitely has it in for us. That's for sure. That's for sure.
So SPY, what's the market gonna do here, Chris?
It's a very, very interesting market. You know me, I spend very little time looking at the opinions of other people, right? I just look at what my tools tell me and stuff. So I'm going to share my screen and show you what I see, and we'll see where this comes out. So Friday was a very interesting day here on this one-day chart that we have. We broke out of our red volatility band. We got a long trigger. We've got our squeezes all lining up. We've got lower volatility. So on the day chart, we look very good. This is a very, very nice chart on a day basis. Okay. So, if you're trading the day chart, this would be a good time to start looking at positions. But here comes the big asterisk, right? This weekly chart looks horrific. All right. We are still under the 8. We're still under the 21. And these are the charts that are going to drive this. All right. So we can still see upward movement inside the weekly chart caused by the day chart, right? So in order for us to be term bullish, right? So we're starting to look a little bit further than tomorrow or the next day. We need this chart to look a little bit more green, right? We still have negative squeezes. Our momentum is still to the downside, albeit getting less, right? So when you read a squeeze, this is still negative momentum, but reducing. So reducing negative momentum. And these moving averages are key. Your 8 and your 21. If we're not above the 8 and the 21, this is going to be a very difficult chart to see going that way, which would mean this would be short-lived. We've got these areas of
below the 200 as well, aren't we, on the daily?
Oh yeah, on the daily we are. Let me put the 200 on here. You'll see we are nowhere close to it. Let's put it on. Let's put the daily 200. So it's not even on the chart. So I think we are, yeah, we're down here, right? So this is where the magnets are, right? This is going to pull price. So you've got to be careful about going, okay, that's it. The time is up. We're going to go long, right? You can't do that. If you're going to trade the day chart, you're going to have to use shorter intraday time frames. You're going to have to govern yourself by the setup you see. You cannot do this. You cannot go, okay, I'm going to go short on this. Okay, so I'm going to go in the direction of the weekly and then manage it on the daily. These two charts don't talk to each other in that sense. They're not telling you the same thing. If they were both saying short, okay, we can do something. But we've got one going long, one going short. So you have to trade this one slightly different from how you would trade that one. So daily looks good. So for the week, yeah, we can see some upward price movement. We've got some support zones in these green boxes. If we can break these levels and get confirmed entries above there, we could probably see SPY going here, right? We've got squeezes all in alignment, but our trend is still this way, right? We are not in an upward trend yet until we go past through 460. Okay, I do not think we're going to get to 460. So there's the day chart, trade it carefully. Your weekly chart, we are not above the 8, we're not above the 21. We need to get above this green box in order for this to start looking slightly bullish. I mean slightly because the trend will still be down. We got to get above there to go bullish at 480 on the weekly. This is concerning me. Okay, so we could come up, break the 8, break the 21, and then hit resistance and fail. Totally plausible, but remember, inside one of these candles is 5 trading days. So a lot of data goes into one of these candles. That's number 2. And volatility is increasing. It's still green down here, which means volatility is high. So we cannot be selling put spreads. We cannot be doing bullish trades that are going to take longer than 30 days or so to mature, because this chart is governing us to the short side. This is the scary one. Look at the monthly. Does this look like a chart that you would want to go buy now? This doesn't look good at all. We've just started a red volatility band. Our squeeze is about to go down. All right, look at these, the 10 and the 15. You see how these are already negative? These are the ones that are going to push this down, which means price will come down. Now, I think we've got this support layer that will hold, right? So for me, I think that we will hold down here.
What level is that? I'm trying to.
This is 376.23. I'm going to just add something on here. So I'm going to just use the week. There we go. So this here, we've got some support on the 375.8. Okay, the 8-period SMA on the 375 and the monthly 34. That's where our 2 zones are, between 372 and 418. So as long as we're trading inside this zone on the monthly, we got to be really careful, because this is not bullish until we get back above 489, right? So you can see how progressive those heights become. It becomes really difficult. You're not going to get to 489 until the day chart starts going positive. And you're not going to get to that chart over there positive until this starts going positive, right? So everything needs to flow and stack up. Now, if you ask me, I would be trading on the shorter time frames, because these squeezes look a little bit more momentum based, right? This is where we've got the opportunity. Here, I'm still predicting we're going to be failing at one of these levels and we're going to be coming back down. So we still have long puts in play for that move to the downside. And this range, this between this green zone and this green zone, is probably where we're going to trade for some time. So we just need to be sensitive to it. It's not a factor of this is what's going to happen. What we have to do is understand that anything can happen. The market could turn around and say, you know what, all is good now. Let's just turn on the printing press again and fix this. All of a sudden, this goes down the, down the tubes kind of thing. This whole analysis becomes pointless. But it's important to trade what you see, not what you think. All right. I would love to think that this is just going to be the start of a new bull run and we're going to hit 6,000 or 600 on the SPY in the next couple of weeks. I'd love to do that, but I can't. I can only trade what I see. And what I see here is very short duration opportunities on the 1-day chart. We can switch this into the intraday charts as well, and we can see what stacks up there. So let's have a look at a couple of the intraday stuff. So here, when I trade intraday, I tend to use the 15-minute chart mainly for my signals. And you can see on Friday, we had some pretty good signals. We had this long trigger here at 9:30. We took some profits over there. We got in, we did a quick short trade that didn't work, and we got into a long trade just before the close of the market on Friday. So from here, if you look, there's our day chart triggering along. We've got a long trigger here from the 5-minute that was really good. And we had here on the 1-minute. So how we try and trade is just the chart that we see. We don't try and take into account the weekly, the monthly, all of that. We get that we understand. But this will help us in terms of holding our positions and how long are we going to hold the trade for? What trade are we going to be looking to do? So intraday, I think we should be okay. There is some sort of future pressure today on the markets. A little bit of a downward open this morning expected. That's normal, right? After a week like we had last week, first up week in 8, you would anticipate some degree of profit taking to take place at some point. So markets, I would still be trading cautiously. I don't think this is an all-in kind of scenario at all by any stretch of the imagination. However, it's really, really important to trade the time frame of the signal that you like. Okay, so the speed at which the signals print, that is key. Do not, under any circumstance, trade a 1 minute chart if the signals print too fast for your trading. All right. So, you know, a lot of people trade the 1, the 3, the 5. Trade whatever you are comfortable with. There's no right or wrong. The only thing that counts is whether you can trade it. All right. There are some people who are much faster than me at trading. So for them, the 1 and the 3 might be perfect. For me, I trade the 15-minute chart. I find it a little bit more my type of speed, and it keeps me in trades a little longer. It gets me out of trades a little quicker in certain cases, but that's the way I like to trade. There is no, remember, in trading, there's no right or wrong. Only what's possible.
What about the sectors? I mean, it looks like utilities is recovering a little bit.
Utilities does look better. Let's go and have a look. We're going to open up. This is our 65, 130, and 375. Let's open up our sectors. Let's get them open up here, and we'll go through them. I'm just moving stuff around. So if we go into our watch list, so let's start with home builders. So home builders on the 65-minute, green volatility band, it's above the 21, moving up. We're going to open just above or just at our range mean. We've got a long trigger. Squeezes on the 5 looks like it's refiring to the upside. Our 10, our 15, and our 20 are losing a little bit of momentum. We've got these sell signals that are triggering on the stochastic. So on the 65-minute chart, I think it's a wait. Don't run in just yet. On the 130, we need to get above that green line there. If we can get above 64.12, there's definitely a trade to the upside. What we prefer is when we've got signals that are triggering, long signals, what we try and do is wait for it to pass resistance. We need it just to get past, then we can trade it. If you want to be ultra conservative, I would wait for it to be above 65.60. And here on the day, on the 375, we have a 920 cross. We're above the range. We're above the 21. You could enter it here. This is reasonable to take based on these squeezes that we have at the bottom. Volatility is dropping. You've just got to be sensitive to this area here. So you could buy one, wait until it gets above 65, 67, trigger a second trade, hold up to profit taking at 72.
Did you say that was the 375?
This is the 375. Yeah, that's the daily
chart.
So, yeah, I trade the 375 because it prints a signal at 9:30 in the morning and at 3:45. So before the market closes, I get a signal that will hold for the next day. So I can trade overnight. It gives me some positions that I can trade for overnight.
Would you consider it effectively a daily chart then? No, I mean,
yeah, it's pretty much a day chart with a 15-minute early warning signal. So here on Qs, 65-minute chart, we're sitting in a gray zone. We've got to get above there. We're going to open a little bit below. We'll probably push through that today. Here on the 130, we're above the 21. We're holding that green line, which is the support line. We have a long trigger there where our stochastic and our squeeze triggered above the 0 line. Volatility is reducing, and our 375 also has a long trigger here with this green column. So you could take a long position here on the Qs. Again, just bear in mind that weekly chart still looks fragile. So if you're going to take a weekly, a position on the Qs that's going to be for post this week, be sensitive to that weekly chart. If it's going to be a weekly trade inside this week, you may find that the upside certainly is there. Let's look at XME. Green vol band on the 65, green vol band. So you've got, this is another way to look at it. When we set up our trade charts, I use the same settings across all the charts. The only thing that I don't have is the time frames are not the same, right? Obviously. 65-minute, 130, 375. If I have the same setup on all three of these charts, it's a trade. In my book, that's a trade, and I can hold that trade for a while. So baseline would be green volatility band above the 21, green volatility band above the 21, green volatility band above the 21. For me, it's a trade. Like that, you can already tell just from those two criteria, there's a trade that can form here. The issue is going to be the timing at which that you use to get into the trade. All right, if you want to enter your trade off the 65-minute chart, it's probably better to use your bottom of your vol range as your stop loss for the first maybe 2-3 days of the trade. And then as this starts to improve, you can raise the stop loss as you move into the trade. Here on the 130, you have this declining squeeze, but momentum is still strong. So you've got, for me, the 130 and the 375 far trump the 65. I don't really take signals off of 65. To me, that it's almost like this limbo. It's sort of a purgatory trade for me. I don't really know if I'm long-term, short-term, if I'm going here. And remember, long-term, short-term for me is not 3 months, 6 months. It's, 5 days, 2 days, 1 week kind of stuff, right? So I'm not looking at that to take a signal on the 65. I would probably take a signal on this on the 130. There's my long trigger. You can't take a long trigger under the 21, right? So you can't take that one. You can only take it on that blue candle. Squeeze is fired. And if you got in there, that would be a really good move. That's a high probability move when that squeeze fires. So we've got a profit target here. You'd probably be going from 55 to 59 would be your profit target. That would be the trade with a secondary order somewhere above 59.30. So if you wanted to trade it, that's the setup that I would be using. Let's look at XES. The energy complex in its totality is very bullish at the moment, right? So let's see what we've got. We've got a divergent high bar printing here on the 65. So that gives us indication that we should see some lower prices over the next 3 to 5 hours, right? So we could see a lower price than that bar today. We could. Squeeze is losing momentum. We have a sell signal, sell signal, sell, sell. We've got a squeeze firing, squeeze dropping. So this one's a mixed bag. And I would have to default to the longer time frame trend to trade this one. So I would be sitting here on the 375. We had a divergent low bar, which indicates higher prices to come. Here's our profit taking and our bullish line. So once we get above that line and we get into this red zone, there's my trigger point for a new trade, would be 79.31. Here on the daily, I've got some targets. So 79.31 is there, and here again at 84.62. So those are where I'm looking to add to my trades. I'm not looking to exit this and take profits. I'm looking to build my position over time, because I think green, 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 this is a strong trend.
Do you see energy continuing to go up? I mean, is that a trend that you're anticipating will be with us for a little while?
Yeah, I think we'll probably see strength in the energy complex for some time to come. I don't think, I'm not a fundamentalist, right? So I'm not going to be looking at what the news is saying about price. What I'm looking at is, how does price behave inside these ranges? And in the past, what you'll see is this narrowing of a range on the shorter time frames. We're trading at the top. It's acceptable for us to see price come down to 77, somewhere down there. It's totally within the realm of understanding that this can come down here and you should still be bullish. It's when it closes underneath that's when you need to start becoming a little bit more cautious. So here we're in the middle of the range. Here we're in the middle of the range. So I think as long as we trade inside the middle of this range, it's trending in the right direction. XLI, green vol band above the 21. There's the 21. There's the 8 above the 21. Green vol band, crossover of the 920. Green vol band 821. Squeeze, squeeze, squeeze. This is almost like on Friday. It was a matter of there were just too many signals to trade. There were just too many things saying go long, go long, go long. Now, I don't have a trade there. Let me just go into my tool. And I've got a trigger here on the 510 on the entry. So I'm looking for a 510 entry down at the bottom. And an exit here with the squeeze firing. If I turn that off, I may get some signals. There we go. There's the signal, right? So if I took off the squeeze, so I take out the squeeze signal on the 20 firing to the upside as a condition of entry. Let's put that as a 5. We can now see if that squeeze, no. So that squeeze never fired. It was just momentum, right? It was just momentum moving to the upside. So there's my long trigger. Wait for it above the 21, second close. That would have been the candle you entered on. Pretty nice move that we would have got from Wednesday to Friday of last week here on XLI. Let's look at XLB. We'll cover DIA in a minute. So XLI, green vol band, squeeze firing. There's our trigger here. Let's have a look. That one, as long as you've got the sort of confluence between your major signals, right? Your major signals are trend, direction, and band. It's all pointing in the right direction, bottom left to top right, bottom left, top right, etc. So when you analyze, a lot of people will tend to overanalyze and equal weight certain things. So when they trade, they go green, 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 but some obscure indicator is giving a bearish signal. They go up, no trade. And they equal weight things, right? So this can sometimes be a big problem for people. Every single indicator has a different kind of influence on the decision that gets taken. And you have to make the distinction in your trade rules between lagging indicators and leading indicators. Which are the ones that are going to give you an idea of where price could go, and what are going to tell you where price has been? There's a massive difference understanding-wise as to what those are, right? So remember, any indicator that is price-driven with moving averages is a lagging indicator. Price has already happened or changed for that indicator to trigger. There is no guarantee that that movement, that momentum, whatever it is likely to continue. You have to be careful about the assumption that those things are going to continue. The only indicators, in my experience, and happy to take feedback where I might be wrong, is the oscillators, the ones that I use down at the bottom tend to be more preemptive. They give me an idea of where price could possibly go, not where price may go. And none of these oscillators are telling me levels. They're telling me direction and possibly strength. I can tell when a big move's going to come. I can tell when a small move's going to come. I cannot tell to which direction those are coming until I see the colors. So it's very, very dangerous to assume on anything. If you look here was the short signal, okay, and a MA cross that was short. The MA cross, a lot of people use that cross there as a trigger. Not many people would have gotten out right there. Not many people, right? That's a hard signal to read. They wouldn't have taken profits there because this signal had not changed. But you got in here and you got out there. This short using the columns was a loss trade or a scratch at best. You got out for a scratch. That's the weakness of a moving average tool. Okay, a moving average is not going to give you a directional play. Now, if I had taken a short trade there and a long trade there, that would have been a loser. Okay, close the short, go long. But look at how the long would have worked as well. And I would have gotten slightly earlier than that moving average. Okay, so sometimes, you know what, you've got to work out for yourself what resonates the best with you. There are people I know that trade moving average crosses incredibly successful. Good for them. There's nothing wrong with it. It's just that they've worked out their understanding and interpretation of that signal as best for them. And often I'll see in social media, person A, this is the only way to trade. This is the only way to trade. And I always look at that and go, be very, very careful in trading about finding a hill that you're willing to die on. There is no such thing as a holy grail, nothing. The only thing that works is your level of interpretation, skill, and experience in using that signal. I've seen shitty signals become very profitable trades, and I've seen really good signals get messed up by people. So it's not the signal. The signal's not going to make you a good trader. All right? And a lot of people think that that's what happens. It's not that. It's your ability to control your emotions that will make you a better trader. And you can have a rubbish signal and be a very non-emotional trader who just follows the interpretation of what you've built and then can still trade profitably. I know a lot of my clients can outperform the mathematical back test of a signal because they've managed to control their emotions. Not because the signal's better than anything else. It's more about themselves and how they can become better traders. So just be sensitive to that. XLB, that looks like a good trade. XLRE, so real estate. Again, green, green, green. It's difficult to find a bearish setup here on these charts for these sectors. Everything was looking very attractive on Friday. Healthcare also looking good. That's a very, very nice setup that we have here on healthcare. You can see the long trigger there, and we had that long trigger here. Bit of a chop. So, you would have got in second close above the 21. So over here, that would have kicked you out of the trade. So this one would have been a tough one because this should have kicked you out of the trade when you broke the 21 to the downside off that long. That would have been your exit. but getting back in, change of the vol band. We can switch this up, see if there was a signal. Let me go change this. So here, let's put that on there. So here on this one, so I'm in the 375. If we change this up a little bit and we use the 20 as an entry and we use the squeeze crossing, yeah, there's no trade there. Oh, let me see. There was something that flashed there. So there was your entry signal. This would have probably kicked you out. Tough one, you know, a bit of a missed opportunity as far as I can tell, but looks good. I think that there's definitely a setup there that we can play. Utilities, this one was a bit of a reversal of fortune. We were short utilities in this move down the side. Now, it looks pretty dramatic, but don't forget the scale of the graph. So we were short from there. We sold some shares, bought some calls. We did a married call. We got out of our shares at this point here, held onto the long call option, which was now profitable. Oh, sorry, it wasn't very profitable. We added some at that point there, and that's really taken off. So our XLU position, we're up around 25% now on that trade using the day chart or the 375. So this looks good. XLF, we have a trade in FAS, which is a leveraged version of this one. Here you can see on the 375, the sequence that we had, long, exit, long, right? So you had this long, then the MA crossed to the downside with this, this doji candle that formed over here. Then we had this hammer candle, then another doji, then a divergent low. And it really was this sequence here that was the trigger, right? So as soon as you see this, you've got your green, you've got that, you've got an active buy signal. Here's the trigger, squeeze fires to the upside, and the market's open. So again, you've got a lot of opportunities that sit across these sectors. GDX is another one. Sorry, I've got some trades on that need to shut down a little bit. Give me a second. Yeah, so you've got, sorry, now you're going to see a whole lot of triggers popping off. Yeah, GDX, green, green, green. This looks pretty attractive. This setup that you have here with the stochastic crossing 0 and the squeeze starting to fire on the 65 could be a trade, very, very short duration. Here on the 375, not as good as the 65. So definitely a shorter duration trade there. XLY, green, 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 squeezes firing. This looks like a reasonably good trade to play to the upside. The chart that I like the most is this one here with this long trigger that we had on, that was Friday, Thursday, Wednesday, Tuesday, we had that trigger. Now you can see some of the candles starting to form, you know, the colors and the momentum will start to form out as well. XLP, consumer staples, taking a bit of a hit this morning, but in a green vol band. There's your long trigger, a little bit of a takeout. Here, you've got this declining squeeze, declining squeeze. So this will probably see some downward momentum starting to form. It looks like it's going to fire to the upside on the top squeeze. Okay, so once we start seeing that, you've got sell signals also here on the 130. So XLP might just be rally to the 21 and a fail, but you'll need to wait 130 minutes to see where this candle closes. If this candle gets above the 21, we need another one above the 21, and then we're going to go into this box up here. Let's have a look at Labu. I know you like Labu, so we'll have a look at this one. Labu, for me, is an interesting trade because of the biotech piece. It's been hammered. This stock has had this huge decline, and then it's just been chopping inside this range. If you are trading this, be careful of the reverse splits that tend to happen when these stocks trade under $10 a share. Those can be pretty painful. Not, you know, they financially don't change anything for you. They just dilute your position a little bit. The thing is, if you are trading a covered call strategy on this, it does affect the numbers that you're going to be using. So be careful on this one. It's not my favorite thing to hold. I would rather just buy XBI or shares in Labu rather than the option. But it's got an interesting setup. This is definitely an interesting setup worth looking at. Cure is the triple leverage of XLV. All right, so XLV obviously taking a hit this morning, XLV. So Cure comes down. We'll see where this one trades later on. Maybe there's an opportunity here, but you can see the stochastic fall. See how the stochastic all lines up, squeeze firing short. This is going to probably be down for a few hours, and then we'll see this circle around. EWZ, Brazil. This is a pretty nice ETF that tends to move when it has an opportunity. There's our long trigger coming out of the vol band into green, squeeze firing north. Stochastic is sitting at the overbought level, so be careful. Green, green, green. Exit signals have already been there for taking profits. There was a really good signal here on the switch of the vol band with our profit taking over here. And yeah, that's about it. I think that we've got quite a few opportunities that sit on the book at the moment. I've got a couple trades that I'm watching here out of the corner of my eye. You know, so it's really a matter of, you know, position yourself in the areas where there's consistency across the time frames and trade short. Don't, you know, not short side, trade short duration. Don't try and sit with long holds. You should be good to go on that basis.
All right, excellent advice, Chris. Well, we will talk next week. You guys
Awesome.
Leave comments for us, Chris to answer, and also go over to Rogue Investing /alpha. Check out Alpha Hunter's product and get some coaching. So, Chris, till next week, man.
Take it easy. Drive safe, travel safe wherever you might be. Look after yourself.
Yep. Sounds good. Take care.
Take care, man. See you soon.